Hello and welcome to this presentation. My name is Simone. I'm an accountant and a financial analyst, and today I will explain the cash and accrual basis accounting methods. In this presentation, I will explain what is an accounting method, what is the cash basis accounting method, what is the accrual basis, and the difference between the two. I would remember that the material related to this presentation, along with other accounting materials, are inside my website vatradi.com. I would also remember to subscribe. The subscription is quick, is free, is important for you that you are notified when the next videos will be available. It is also an important indication for YouTube, which can use the videos inside this channel for others looking for the same arguments. So many thanks in advance if you subscribe, and we can start now. I start by explaining what is an accounting method. An accounting method is a set of rules that explain how and when income and expenses are recorded. And there are two main accounting methods: the cash basis accounting method and the accrual basis accounting method. So under the cash basis accounting method, we have that revenues are recorded when cash is received. What does it mean? That I produce my product, I deliver my product, however, I do not record the revenue inside the book until when I receive the money from the client. Expenses are recorded when cash is paid. I'm going to my supplier, I purchase the material, however, I do not record the cost into the book until when I pay the supplier. So, the cash basis accounting method, what is the main advantages? It's easy, and usually when someone starts a business, usually use the cash basis accounting method, because you record the revenue only when you receive the cash. You record the cost only when you pay the supplier. The problem is that the cash basis accounting method is not to give you a full picture of the situation, and almost all accounting principle does not accept this accounting method. So almost all companies use the accrual basis accounting method. And based on this accounting method, revenues are recorded when they are earned. What does it mean? I produce my product, I deliver my product to the client, I issue the sales invoice, I record the revenue inside my book, also if I do not receive the money from the client. Expenses are recorded when they are incurred. What does it mean? That I'm going to the supplier, I purchase the material, I receive the purchase invoice, I record the cost inside the book, also if I have not already paid the supplier. What is important is that the accrual basis accounting method is set up based on the matching principle. What does it mean? That the cost must be recorded inside the same reporting period of the revenue that they help to generate. So now what is the advantages of the accrual basis accounting method? That it gives you a full picture of the situation, and that is accepted by all accounting principles. The problem is that it is complex, so you need an accountant like me to do the job. The second one is that the cash flow must be prepared and read correctly. So now, what is the main difference between cash and accrual basis accounting method? The main difference is the timing of revenue and expense recognition. And in this table, I summarize what I already explained. So under the accrual basis, I produce my product, I deliver my product to the client, I issue the sales invoice, I record the revenue inside the book. This is not the case under the cash basis. The cash basis, I record the revenue only when the client is paying me. Under the accrual basis, I'm going to the supplier, I purchase the material, I receive the purchase invoice, I record the cost inside the book. This is not the case for the cash basis accounting model because I record the cost only when I pay the supplier. And this example that I prepare will clarify further the situation. Vatradi purchase material from company B. The purchase invoice is dated 11 December 2026. Vatradi will pay the invoice the 11th of January 2027. So if I suppose that the financial year of Vatradi is from January to December, I will have that the invoice is dated 11th of December. I pay the supplier 11th of January. I'm between two financial years. To run the business under the cash basis accounting method is very different than to run the business under the accrual basis accounting method. And this is the reason. Because under the cash basis accounting method, I have that the cost is recorded in January 2027 and is going in 2027. Therefore, I will record more profit in 2026 rather than if I use the accrual basis accounting method, because under the accrual basis accounting method I have that the cost must be recorded in 2026. So now there is two situations when cash basis equal accrual basis accounting methods. When the company sell the product and receive the cash immediately. When the company purchases the material and pay the supplier straight away. These are the two situations when the cash basis accounting method equal the accrual basis accounting method. So now, this slide is completely in the dark. And this is an example how is the situation if you run your business without any accounting method. You have no idea what are your costs, no idea what are your income, no idea what is your cash flow availability. So under the cash accounting method, you partially turn on the light. Why? Because you record the revenue when you receive the money. You record the cost when you pay the supplier. So you start to have an idea how is running your business, but you don't have the full picture. It's the accrual accounting method that is giving you the full picture, because the revenue is recognized when it is earned. Therefore, we have that if I do not receive the cash immediately, I need to record the amount in accounts receivable. The accrual accounting method, it forces the accountant to do further job. And in this situation, for example, the accountant need to create a GL code which is going inside the asset of the balance sheet and where are recorded all the money that I will receive in the future. Expenses are recorded when they have been incurred. Therefore, if I do not pay the material service immediately, I need to record the amount in accounts payable. Again, this accounting method forces the accountant to do further job and better explain the situation. In this situation, the accountant needs to create a GL code called accounts payable where are recorded all the money that I need to pay in the future. And only from this example, you already understand that with the accrual accounting method, I start to have more information and a better understanding of the situation of my company, because I have an idea of the money that I will receive in the future and also an idea of the money that I need to pay in the future. In addition, what I will say that under the accrual basis accounting method, when I arrive to year end, I need to record the famous adjusting entries. As I already said, the accrual basis accounting method is set up based on the matching principles. Means that the cost must be recorded inside the same reporting period of the revenue that they help to generate. Therefore, when I'm at the end of the financial year, I need to record the adjusting entries, which are all journals that are recorded in order to bring the cost and the revenue inside the correct reporting period. And the adjusting entries will be the discussion in the next videos. So please remember to subscribe in order to be notified when these videos will be available. So this is my presentation today to explain the accrual basis, the cash basis accounting methods, and the difference between the two. If you have any comment or any question, please leave below. Many thanks for watching my video, and we see you to the next presentation.